brought to you by Michelin Canada. Michelin, a better way forward.
So now that we've decided whether or not to incorporate, and we know whether we're truly an independent owner-operator, what can we do in the day-to-day operations of our business to ensure that we're paying the least tax possible while still paying what we need to be paying?
Right. Well, I think that comes down to a good practice, and I think the day-to-day phrase you used is exactly that. It comes down to doing little things every day to make sure that you are running your business properly. And the biggest thing for most owner-operators is, quite frankly, just collecting the receipts and being aware of what's going on around them. We've often used in our company to explain things to people the idea of buying a pen. And you spend a couple dollars buying a pen. You want to make sure that you keep that receipt, so when you get back in the cab of your truck, where are you going to put that? How are you going to keep it so that one day, whether it's a couple of months from now or wherever, that's going to get to your bookkeeping or into your accounting system and be entered.
But it's just a pen. Like how can a pen be significant enough to...
Right. A pen, like anything, is just one small example, because there's you're going to buy a pen every day. You're going to buy some little thing every day that you're spending money on, and if you don't keep the receipt and then have it follow through its process to getting up in your tax return, it ends up being a lot. Now, obviously, missing one pen receipt's not a big deal, but most people would be surprised, and I guess truthfully not surprised, at how many times that, from my end of things, dealing with people, and when you're reviewing statements with them quarterly or even at the end of the year, that they'll look at it and all of a sudden they're saying, well, where's my tire bill? How come my repairs and tires expense isn't this many dollars? Because I know I spent had some big bill. And sure enough, when we go back through everything, it isn't in their paperwork. It is maybe still underneath the passenger seat. It is maybe still at the dealership and he never even got a copy, or it's just gone and we've had to go back and get copies. So it happens all the time.
What's a good way to stay organized? Should you just have a shoebox to keep all your receipts in, and then once a year you send them off to your accountant, or should you be keeping them organized on a weekly or monthly basis?
I think absolutely it should be done on a weekly basis, but again, back to your day-to-day statement, it all builds. Right? If you do it every day, at the end of every week, you can do something then to make sure that bunch of information is placed somewhere that's gathered. And I mean, it can be a shoebox, but it should be a shoebox that you deal with every week, right. Not a shoebox that is by the door, the back door of your home, and you throw things in all year long, and at the end of the year now you're going to take it someplace and expect someone to perform some sort of miracle for you and tell you what kind of a tax bill you have. Okay. You need to make sure that you take the pen and the $2 and it gets noted in your books, such that you get, again, if you bought the pen in Canada, there's GST or HST on it, so there's some money back on a refund that you should be getting. Also then, if you're not expensing that on your tax return, you're going to be paying 25–30% tax on that pen because it's not getting deducted. You look at it as an opportunity cost. It's not getting deducted off of your expenses. So quite quickly that $2 pen becomes $3. Okay. Not a big deal, but when the $800 tire becomes $1,000 because you lost it or forgot about it, etc., then it really, you're just wasting a lot of money for no reason.
Now, speaking about miracles, we've all heard by the owner-operators who don't pay taxes. They've got an accountant that has found a way to prevent them from paying taxes. Is that possible, or is there something fishy happening there?
Well, there is something fishy happening there. I mean, obviously any business can have a good or a bad year. If you're constantly having bad years, then something's wrong. So you're not a good business person. You're not in the right business. Obviously, no one likes to pay tax, but there's a difference between paying the wrong amount of tax and the right amount of tax. And sometimes too much is wrong, and sometimes too little is wrong. So you got to be smart about using the tax laws, keeping your receipts, running your business properly. But if year after year after year you are not paying any tax, then what people don't stop and realize then is, what are you really showing Revenue Canada, right? I always sarcastically say to people all the time, you know, welcome to Canada. We pay tax here. So if you're not paying tax, you're really showing Revenue Canada that you're not making anything. And by anything, if you're under $4,000, you're not even paying into your Canada pension plan. If you're under $12,000, you might not be paying any tax, but what are you doing with a $12,000 income? How are you paying for your kids' pizza money, to paying for a house and a mortgage payment and a car payment if you're not making $12,000 a year? It's a pretty expensive country to live in, and there's taxes to be paid, unfortunately.
So sooner or later, Canada Revenue Agency is going to connect the dots.
Quite simply, they will. They run comparisons all the time, and that is certainly one way that your number may come up for review. Now, of course, it may not ever come up too, but on the same token, you only get out of things what you pay in. So in something particular like Canada Pension Plan, the biggest drawback on that is what you're not paying in, you're not getting out. I mean, Canada Pension Plan will one day hopefully help you retire. It will pay out a death benefit and some survivor benefits to your spouse and your children if you were to pass away sooner rather than later. It also will pay you a disability pension if you were to get hurt. So if you're showing them a very low income and therefore paying in very low premiums, then you're going to get very little out of it. So again, if that's really what your business is about, then fine. That's who you are, and that's really what you're making, and that's what you're really paying. You may want to consider, though, getting out of business and doing something else, or moving it or changing it somehow. But if you're cheating and for the goal of paying as little as possible, God bless you, that's your decision. But I don't think people often stop and think about what all the ramifications are. And again, many times, I had a client many years ago who always had a very low income. I didn't help him with a very low income. He had a very low income. I can say he was playing with numbers, but he had a very low income year after year. And when he was very near his retirement, he was dumbfounded that he was absolutely going to get basically nothing from Canada Pension Plan. I don't know what he thought he was going to get, but he had put basically very little money into it all that time.
So it does catch up to you in the end. What you mentioned keeping receipts, trying to stay as organized as possible. Do you have any other tips on the day-to-day operation of running the truck that you can do to stay organized and maximize your return at the end of the year, or minimize what you're paying legally?
Well, I always believe too, another big thing is having two bank accounts. I just think that anybody that was going to try to run a business and run a household, your family, through the same bank account, the two worlds are just going to collide. I think that there should be a business bank account and there should be a family bank account, or a house account, as I often call it. And with your pays, your owner-operator settlements, your business bills being paid out of there, your GST refunds going in and out of there with Revenue Canada, everything for that business coming out of there, and then you budget yourself and move money over to your house account to pay for the pizza day, the groceries, the mortgage payments, that kind of thing.
Okay. Now, obviously, taxation can be as simple or as difficult as you make it. For those do-it-yourselfers, do you think that often they're missing out on opportunities to really maximize their return?
Yeah, I think they do. I think they miss out on just that third-person perspective to sort of push you on some things sometimes and stop and make you think. It's always easy to fall into a rut and to think you know everything, but really you don't. Another thing I find is, I mean, again, back to the pay too much, pay too little, is you might presume that a mom and pop doing their own books might be overly aggressive on everything when they're setting up claims for different things inside their books. Oftentimes I run into mom and pops and they're going the opposite way. I mean, yes, you should be conscious of Revenue Canada, and I'll use the word respectful, I guess, but you shouldn't live in fear with them either. And so sometimes people are paying too much because they're so afraid of an audit, they're so afraid of different things, they're just backing away on many types of claims in order to not have a problem. Right? everybody has different things that will let them sleep at night. Some people can't sleep if they pay too much. Some people can't sleep if they think they've paid too little. So for us, when we have customers and we meet new people, we try to figure out who they are and what makes them sleep at night, and then we advise them accordingly. And people, when they're running their own business, the same idea. They have to decide. But sometimes they're giving things away, and it's just wrong. It's just, we all work too hard for our money. You shouldn't be giving it away either.
Especially in this business, you can't afford to be leaving money on the table when margins are as tight as they are.